The major averages finishing the day in the red. Tech, the worst performing sector on the S&P 500 today, but still up 10% month to date. So is the uptrend still intact, or have the markets and especially big cap tech stocks gotten too expensive? Well, Scott Wren of Wells Fargo Investment Institute and Courtney Garcia of Payne Capital Management, a CNBC contributor, are here to talk about that. Scott, you say that we're due for a bit of a slowdown in the back half. Is that priced in overall, and is that more about the mega caps adjusting, if not, or the rest of the stocks?
Well, John, I think when it comes down to it, the mega caps, their earnings growth is going to slow, and you're probably going to get some broader participation, at least from an earnings standpoint, and probably from an individual stock standpoint outside of the Mag 7. As we move certainly late this year and into 2026. So, technology, those stocks have obviously ruled for most of the last, let's call it 18 months or something like that. But I think right now, we blew through the 200-day moving average in the S&P 500 pretty easily. We're far above that right now. We really hit, if you're a chart watcher, we stopped yesterday basically at another resistance level, where beyond that, the next level's the record high. And so it just doesn't make a lot of sense to us that we'd rush to get to the record high. There's still plenty of uncertainty out there. We don't think there's going to be a recession, but there's certainly going to be a slowdown. And we certainly think you're going to get an opportunity to step into some stocks at lower levels than where they are right now.
Okay, Courtney, though, I just heard Elon Musk tell our David Faber that he's buying a staggering number of Blackwell from NVIDIA. In that kind of a situation, it's kind of hard to bet against the Mag 7, isn't it?
It is, and clearly you're seeing investors are catching on to that. You actually pointed out here that the Mag 7 is up about 10% month to date. If you just back out that a little bit to the last 4 weeks, it's up over 25%. It is still down, though, since the beginning of the year. And this is actually something that I think we've really been looking at, is the fact that these companies are getting very expensive. So as much as artificial intelligence is the story, it's going to continue to be the story. The question is how long until all this CapEx actually comes to hit the bottom line of these companies. And right now, you're paying like 27 times forward earnings for the Mag 7. But if you look at the other 493 stocks, it's much more reasonable at 18 times forward earnings. And that's where you do want to own these companies. They're not going anywhere. AI is going to be the big story over the next couple of months, years, decades. But a lot of that growth might come from your better valuations. So this is why, as an investor, you want to own them, just don't over-own them. And a lot of people who haven't made changes in their portfolio have much more weighting than I think they realize. So it's just a good time to say, okay, I don't want to be overexposed to these, because some of these other areas of the economy might start to outperform.
Kind of hard to do that, though, Scott, when people are trying to time exactly when to get out or when to get in. If your time horizon is more than, say, 3 years, do you bet on AI despite a digestion period, just sort of expecting one? What do you do?
Well, I think you do, John, and that's, we cater to retail investors here, and if you have time on your side, 3, 4, 5+ years, you need to be buying on these pullbacks. Now, granted, we're only a few percent away from the record high, but when you don't think there's going to be a recession and stocks are down 10 or 20%, I mean, you need to be stepping in here, and that's what we've been trying to talk to our clients about. But certainly, when you have time on your side, AI is going to be a big component of what's going on. Industrial power, the electrical grid right now can't handle what's going to happen down the road. And I think stocks in general, when you have that kind of time frame on your hands, right now, certainly technology, communication services, financials, I mean, we're buying all of those sectors. Right. And I think you really have to take advantage of pullbacks when we have them.